friends, today we are going to understand the basics of accounting. Before that, let us understand what do we mean by the terms accounting and accountancy. Many a times these two words are used interchangeably, but there is a very fine line between these two. Accounting means recording, summarizing, analyzing, and reporting the financial transaction. It means that it is all concerned with writing and maintaining the books of account for a business. On the other hand, accountancy means the interpretation of the financial data that is collected through accounting and communicating the same to all its users. Now let us understand the rules of debit and credit. There are three types of accounts, namely personal account, real account, and nominal account. Personal account means a person. A person may be natural person like you and me, and an artificial juridical person like SBI, like Tata Motors, like Reliance Industry, or Cafe Coffee Day. These are all examples of artificial juridical person. Natural person example, Mr. Shah Rukh Khan, Narendra Modi ji. And obviously you are the example of natural person. So under the personal account, there are two things that we have to understand. That the personal account means a person. A person may be a natural person or an artificial juridical person. So what will a person do into a business? A person will either be at receiver end or maybe at giver end. And hence the rules under personal account says debit the receiver, credit the giver. The second type of account is real account. Real account means all the assets. Real account means assets. Now what are assets? Asset is anything that is being owned by the company. So this asset may be fixed asset or the current asset. Fixed asset are those assets that will be utilized by the company for more than 1 year, like plant, machinery, building, land. These are all examples of fixed asset. And the current asset. What do we mean by current asset? Current assets are those assets which will be utilized by the company within 1 year. So fixed asset means all the assets that will be utilized for more than 1 year. And current asset means all those assets which will be utilized for lesser period than 1 year. So what will happen to the asset? An asset in the business either will come in or will go out. So the rule says debit what comes in, credit what goes out. The last type of account is nominal account. We have already understood that there is a person, there is some assets. And why a person will invest in the asset? Obviously, for profit and loss. So the nominal account will be dealing with expenses and losses and also income and gains. So the rule of debit and credit under the nominal account says that we have to debit all the expenses and losses and we have to credit all the incomes and gain. Now, if it is difficult for you to remember, I'll give you a simple trick that in every account with the C, there will always be G. With C, there will always be G. So, if you are crediting under the personal account, if you are crediting giver under the real account, you are crediting what goes out. And under nominal account, you are crediting income and gains. So always remember with C, there will be G. With C, there will be G. And opposite of that, you have to debit. Opposite of that, you have to debit. That's all for today. Let's meet next time. Thank you.